What's going on, YouTube? I'm back again today, and today we're going to talk about the fundamental of how to analyze a stock. Now, this is for beginners so that you don't overthink this. This is not an in-depth video, so if you're a beginner, it's a great video for you to watch. But if you are not a beginner, you want a more advanced video, this is not for you. This is just for people who want to do the basic analysis of a company and see if it's worth buying or not.
Do I need this money in a year? Do I need this money in 2 years? Do I need this money in 3 years? Longer term, stock market's been the best place to be last 10 years, last 30 years, last 130 years.
Now, I'm not a financial expert. I'm just someone who spent the last 15 years analyzing stocks, studying them, and finding what method works best for me. And I'm here to share it with you. It's not looking at the candlestick. It's not day trading. It's just basic concept that I use to purchase stocks for the long term. So here's the thing I gotta tell you. There's plenty of videos out there to try to tell you how to look at all these stocks, the best way to do it. And I found out from great investors like Warren Buffett, the janitor or Japanese janitor that ended up saving 800 million yen and by investing, and people who actually have tried and true track records that I can replicate. And this is what I gotta tell you. Stock picking ETFs are not made to be complicated. Now, I do recommend any beginners to start with the ETF and not worry about it, because ETF, if someone else manages it, you pay a small expense ratio. And if you don't know what an ETF is, here's a video about ETF so you understand what an ETF is.
An ETF?
It's an ETF.
ETF, exchange traded fund. So it treats a group of stocks like one stock. So ARKK it's 36 stocks, but you can buy them by purchasing ARKK.
And you can do that.
Now stay tuned for the end of the video. Like and subscribe to this video so that you can understand it. I'm gonna have an example at the end of the video, so if you want to skip ahead and see the example, this is the time you can do it. But let's get into how the basic step to analyzing a stock. Now, the first thing you need to do is understand the company and industry. Start with the basic. If you don't understand how the company makes money, it's generally best to avoid investing in that company. What's the business model for them? What's the competitive advantage for the company? And what's the industry prospect of the company? So what I do in this situation is I go out and wander around, look at a bunch of these stores, and see if they have flow into them. And this is what I learned from that Japanese janitor that saved 800 million yen. And that transferred over about $5 million. And he lived frugally. And two, he did people watching and analyze where the money was actually going. And the best example I can go is I go around looking at see what stores are making money, what product is actually selling, to make a decision if that company is something's worth investing. For example, ExxonMobil. I understand ExxonMobil. It sells gasoline. It makes petroleum product. So I understand the basic of the company. Now, I watch people whenever everyone switching to electric and everyone moving away from it to hydrogen, and thought to myself, is this company going to go away? Is the infrastructure here for electric vehicle? And it didn't check all the boxes. So when it was dipping, I purchased ExxonMobil because I thought to myself, hey, we are going still need gas. We're going to need propane. We're going to need all these gases so we can live day to day. Even plastic is made out of petroleum. So yes, guess what? We're going to need it. And after I look at the chart and see how they break down how much money they make in each category, I was like, okay, this makes sense. perfect sense for me to buy this stock. Now, once you understand the company and the industry it's in and compare it to the other ones and make the best decision you can, you move to step 2 is reviewing the financial statement. Now, I got to tell you this. I used to be a business owner, so I analyze financial statements different from other people. I This is from years of experience, and I'll show you how I look at it. Now, you can look at the income statement, which will show revenue, expenses, and net income profit over a period of time. This helps you understand if the company is profitable. And my big rule of thumb, if the company is not profitable, I do not buy them. I don't do speculation. I don't do, oh, they're going to rise, they're going to do great in the future. No, I do not want to own a company that loses money every year. It doesn't make sense to me. The other sheet of paper I look at is the balance sheet. And this provides a snapshot of what the company owns as asset, what the liability is, and remaining value of shareholder equity at a specific time. This helps you assess their financial stability and debt level. If a company is profitable but their debt is increasing year over year, I normally do not invest in those companies because I do not like that risk level of a company. Keep borrowing more money and over and over and over, and their long-term debt increases. Now, if it increases in 1 year due to a major expansion, I understand and I let that go. But if it's year over year and they're not expanding, it makes you question, hey, why are they borrowing money? Now, the third form I look at for financial statement is statement of cash flow. This shows the cash is moving in and out of the company, and it shows if it's profitable on paper but still out of cash. This is crucial for assessing their liquidity. I do not like people or companies spending more money or more cash than they have. So this is where you can do an analysis on it. Now, this is the thing you need to understand. This is from my experience, and I use this for the basic. I never brought up what is the future potential, what is anything like this. And this is where you have to understand. Now, the third key thing I do is use key financial ratio. Now, I don't use this as much, and my decision is not heavily on this one, but I do use it, and I tell people they need to understand this just so they can see how they're doing compared to other people. Like, do you know what a PE ratio is? A price to earnings. Now, if you don't know what price to earning, it's the current stock price divided by the earning per share, EPS. It indicates how much investors are willing to pay for each dollar of earning. Lower PE ratios normally better. So now that you know what price to earning is, and I'll show you more in this later in the video, now we're going to talk to debt to equity or DE ratio. This will tell you the total liability divided by shareholder equity. Now, a lower ratio generally indicates that's more financial stable and company is not over reliant on debt. And this is one of the things I do look at. And there's also things like return on equity or ROE. That means the net income divided by the shareholder equity. I don't usually use this one, but a higher ROE is generally better. And earning per share EPS is the total earning divided by the number of outstanding shares. And this makes it easier to track profitability on per share base over time. And I generally don't use those last two, but the first two I generally do use a lot. But those are some of the basics you need to understand. Now, the fourth thing I look at is evaluating management and risk. So here's the thing. So here's the thing, management team, look for experienced and capable management team whose whole interest is aligned with the shareholder. So if you see the CEO is a playboy, most likely you're not going to invest in that company. But if you see the CEO is highly successful and they ran multiple companies with high success rate, hey, this is where you start looking at the management team. And the other thing is potential risk. Consider what could go wrong. So, what in the economics that could change that cause the system to go bad? What political things could cause it to go bad? What technology risks could change the fundamental of the business? And these are the things you have to think of the future. And generally, I read newsletters and other indication on this part so I can get a better view. But hey, this is a basic. You don't have to do it in depth. And now, number 5 is consider technical analysis basic. While fundamental analysis for long-term investment, technical analysis can help with timing your entry point. And at the end of the day, I don't time entry points, but you should do this if you want better return. I personally don't do it, but for the basic, I tell you. Now, this is where you look at the stocks charts, looking for the basic stock chart. Candlestick charts can show daily price range volatility, and this is for day traders. What I look at for this one is trends. This means identify general direction the stock price is going over time. And this is what I consider to look at, not anything else. Many traders use tools for moving average to smooth everything out. I just look at the candlesticks and say, okay, 5 years it did this, 10 years it did this, 1 year it did this. So I can get a better understanding. Now, this is basic and not advanced. So let's go into the stock. Let's go into the stock ExxonMobil and show you what I mean. So when I talk about ExxonMobil, what is ExxonMobil? You can go into Wikipedia. You can go to all these other places to understand ExxonMobil. You want to know basic about ExxonMobil. And this is the company information. If you don't know anything about them, you can do a quick Wikipedia and tell you the whole detail about them. Who's the chairman, what stock they're in, or what ETF, and what they primarily do. And here's the information and operation, what they're doing. You can Wikipedia this. You can go to their company website to find more information. And that's what I do to find out more about the company. So that's step 1, is finding more about the company. Now, step 2 on this whole thing is, guess what? You're looking at the finances. So what do I do when I look at the finance? I go to the financial section. I like to use MSN because it's free. And if you do not know anything about it, you can click on this side and it tells you what each one of this is. So the main thing I look at is trends. Are they making more money over time? And yes, it looks like they're making more money over time. They had a few bad years, but over time they've been increasing. And then you can look at the dilute average share, or EBIT, and all this information. But what I look at, are they profitable? And the gross margin is 29.53%, and their net profit is 10.33%. So they're making 10% profit on every dollar that they earn. So I like that. So if they make money, they have operation expense under control, they have operation income under control, they have everything under control. And this is what I mainly look at on this part, is how much money they're making. And are they profitable, and they're doing better year over year. And I look at it annually. I can look at it quarterly too, but hey, this is what people want to do. And the second asset form I look at is how much money they're spending, how much current asset they have, how much fixed asset they have, what's the liability. And this is where you look at it. It's balance sheet, and it shows you, oh, they made 91.99 billion. They have a fixed asset of $361 billion. The current liability is $70 billion, and long-term debt is $34 billion. What I generally like to do is add these two up and see that their current fixed asset and current asset are more than their debts. And other thing I like to do is look at their long-term debt. Has it been increasing or decreasing? And it had a spike up, but then it slowly started decreasing again. So they're paying off their long-term debt, and that's something I like to see. And the last thing on I like to look at is their cash flow. Are they having more cash in the bank than they are spending? So what I do like to see is to either stay average or they start making their cash flow bigger. So they've been stable, and that's what I look at for financial statements. Now, the second thing I look at is their PE ratio compared to the other industry people. And this is pretty simple. You just go down and start comparing, see how they do on average. Same thing with the PS, price for sale. Same thing with everything else. You just come down here and see, hey, how are they doing compared to competitor? And is it worth investing? Maybe they're not doing so good compared to the competitor. Now, the main reason why I purchased them was because the net profit is 5 years versus the peer is higher than Chevron, higher than BP, and higher than, well, most other oil and gas companies. So that's what I do is I compare it here. I look at the data because you have to compare it to similar people in the same industry. It doesn't work if you do it with the other one. And the other thing I tell people to look at is you're going to look at the performance, and this is year over year, and see if it's something you are worth buying. Now, for me, it was worth buying because the 5 year is 177, 3 years was 5.31. Yes, it's not the best looking stock, and that is what you call analysis on the end. Now, I did jump ahead for 5 since I was already there, and that was analyzing the stock just for the performance and looking at this stuff. And I just say do the basic. Does it have an upward trend? Yes, it has upward trend. That's what I look at. And number 4, I know I skipped it, is the risk. And what I do for the risk is see what AI says on it, see if they're doing well, earning valuation, see what story's been going on about ExxonMobil. And then I like to see the investors. And so all this stuff helps me determine if I want to buy it. So after looking at all that, then I determine if I want to buy it or not. That's my video on basic analysis of stocks. Not complicated. I keep it pretty simple. And I learned this over the years. More complicated I made it, the harder it got for me. And I just have certain criteria in each one of these areas. If my performance, number 5, I want to make sure they do as good or better than the S&P. For my debt to income ratio, I want to make sure they make they're not accumulating debt. And for my financial statement, they have to be making money. And for the company information, I just have to know that they're going to be around and their risk isn't that high. So like and subscribe to my video, and that's all I got for you.